you very much. Lovely to be here. Really look forward to giving you a nice round of a panel with our guests here today. It's nice to see that the Munich ecosystem is evolving the way it is in the blockchain field and space after having ETH Munich, now this amazing conference. Welcome, guys. I'd like you to introduce yourself beforehand, and then we'll jump right into it. Max, would you like to start?
Hi, Maximilian, independent contributor to Mango, which is a decentralized exchange on Solana, and I also split my time contributing to Solana itself. Used to work on distributed systems before, and really enjoy the work in building like a very different layer one.
Hi, Robert, usually go by Robs. I have the pleasure of working at Staking Facilities, a node operator, validator on Solana early on. And it's great to be in this panel with people bringing transactions to our nodes. Looking forward to chat.
Yeah, I'm Alex, head of marketing at Elusive. We're building a modular privacy stack on Solana. My background is privacy, ZK, and really bringing privacy to scale, something that's super important for an open society and human freedom in general. And I wrote my thesis on surveillance capitalism and blockchain technology, really inspired by Shoshana Zuboff's work, and ended up here. So really excited.
Thank you, guys. So as you see, a really wide and broad range of different kind of people from different kind of projects. First question I have for you guys is to really understand why you have chosen to basically go within the Solana ecosystem, what the advantages are, and why exactly you positioned yourself as you are right now. Max, would you like to start?
Yeah, I think my journey started sometime in 2020. A friend of mine called me and was like, hey, I need a KYC for FTX to buy this IDO. And I was like, okay, what IDO? And he's like, Serum. It's a big thing. I was like, okay. Didn't even hear of FTX before, but then started looking into it. Went on Discord, tried to build a web UI in the hackathon, and I had some, questions about some arguments and parameters of the API, and the first person that answers was Sam Bankman-Fried, and then he pinged Anatoly, who immediately answered, and I was like, okay, well, these guys are probably busy with a lot of things, but they still have time to answer to minor issues on the API documentation. So I felt this is a good place, in terms of do people who are building this actually really care about it? And then became more familiar with it, and I think until today, I'm very excited about the future of this project and all the projects actually in the ecosystem, because I feel there's a very strong idea behind building a layer one that is totally scalable and doesn't have the same, let's say, fundamental design choices that EVM-based systems have. To me, most of the blockchains felt like a copy-paste approach, and this one is actually from ground up re-engineered. And so still today a mystery that I like to tinker with and build on.
Interesting.
Yeah, a similar sentiment for us. One of our founders is really good in researching base layer networks, and back then, I think it was 2018, 19, he came across Solana. And back then, like Max said, everything felt like it's a EVM copy-paste model, basically. And it felt like a contrarian bet to what's out there. And then we can also echo the onboarding or the commitment experience from the team itself, from validators' perspective though, because they were really, really taking good care of their initial validator set before there was anything really going on. And then the thesis was also, we were really convinced by this, I think, NASDAQ, or blockchain at NASDAQ speed. I think it was the first kind of slogan. And that seemed really intriguing, and then copied with a nice community and validators that we knew from different protocols that also joined the bandwagon pretty early on, made us convinced to double down. And to the soul, also the onboarding, part of the onboarding experience was really cool. So overall, Solana, like you said, deeply cares about their network, and you could clearly tell early on that they don't want to flip tokens, basically. but really build something different and something meaningful. And that's, we stuck ever since.
Yeah, I can definitely agree to that. And even adding, I'm not a Solana native, so I actually have been working the Cosmos ecosystem, also EVM based projects. And for privacy, it's really an uphill battle because obviously blockchains are inherently transparent. And so finding how we can implement privacy on blockchain is extremely complex. And we obviously want to see privacy at scale. I think it's really important for onboarding users, but also onboarding institutions. They don't want all their transactions transparent to the world. So I think that's part of the reasons we chose Solana, just because it's also scalable from the infra level and very fast and extremely low fees. So we kind of wanted to combine that and see that, this synergy between privacy and blockchain can really be born from Solana.
Really nice to hear that these kind of arguments brought you to this point. Before we jump into your projects, what you're actually doing, do you see still this kind of power behind the community and the not just power within the people building on top of it, but the foundation as well? Is it still at this pace as it used to be 2 years ago, or before all the fiascos happened?
I mean, I think there's actually more things happening. I would say the vast majority of the core Solana Labs team is actually busy with like fixing security exploits and performance issues. If you look at like individual roadmaps of different people, it sometimes looks like they're not shipping anything, but it's because they're in these like, testing out all the limits of the system because they had so many performance issues in 2022 that now it's such a high priority that basically everyone on the team is just like constantly battle testing and hardening it. I think from the outside that might look like there's no new features coming out. So that's also why the kind of the agreement right now is that external teams drive new features. So basically the core team is taking a step back and said, okay, we're busy enough with like maintenance and quality insurance. And then teams like Mango or the Fire Dancer team or Jito, I think Margin Labs is the newest one, is coming in and tries to help. There's basically a bunch of teams who were actually users of the chain who are now coming in to dictate the roadmap, basically, and collaborate on it. And so by that, the amount of contributors is just so much bigger. And they really managed to change this part where I think there was a real disconnect between L1 users and dApp builders and L1 builders. I see this a lot in other ecosystems, that these are actually two different categories of developers and they often talk past each other completely. And now with this like new regime, I feel just the feature feedback, like the whole process of designing the architecture just goes way faster and way more fluently and is way better informed.
Yeah, I agree. And especially last year past 18 months was probably one of the worst and one of the best at the same time, because Labs rolled out a bunch of features or improvements that made our life a lot easier at staking facilities. And I think the overall validator set a lot stronger.
So maybe directly an example, yes.
Maybe quick, like how messages are passed between validators so you don't get spammed and go down. Or stake weighted, like a bunch of different stuff that made our life easier, or our DevOps life a lot easier, and everybody else's as well. And this is, like Mike said, I don't think something you see from the outside so much, whereas things like Super Team is very visual, I would say. Also, I think that's also due to some characters that are also here that do a great work of transforming or transporting this high-tech, not maybe end-user facing stuff, first and foremost to developers building on top of Solana, but I agree there's two different kinds, like the DevOps doing the infrastructure and then the developers building a cool project like you guys are doing. And Super Team, I think, is bridging this gap, but also the gap towards like people just wanting to use cool applications or creators. I think Solana is one of the the chains that really doubled down on developer or validators first, then developers, and now the overall creator ecosystem. So I think this is more PR that people really see. Whereas like last year, like I said, there's so many things happen that people on the outside don't really see. But I think it's a even stronger community now after all that happened. A cleansing that kind of happened.
Mm-hmm. And Alex, before you answer, you've been involved in many other protocols and communities as well. Where do you see differences to the community and developers when it comes to Solana?
The Solana ecosystem by far has one of the most impactful developer ecosystems and communities I've ever been around. And there's a lot of synergies that happen thanks to, community-run projects like Super Team. But one of the things that you see, especially during the bear market, is like really doubling down on optimizing infra all the way up to applications. It really forces us to figure out what are the hurdles that we need to get over and the challenges that we need to solve. So it's really great to see, that combined with such a strong developer ecosystem really puts Solana in a great position to move through this bear market and come out of it even stronger. We've already seen the last couple of weeks with Visa, also MakerDAO, giving sort of nods to Solana's technology. And so, yeah, I think in general, it's really optimized post bear market and also shows the resilience in general of the community.
Mm-hmm.
Yeah, maybe some words on the downfall, right? I remember when the whole FTX shit happened, it was quite a tough moment. I remember there was a lot of discussions, a lot of value at risk. The core exchange piece, right, Serum shut down, basically because everyone pulled their quotes because they weren't sure what's happening, who has the upgrade key. This typical Alameda fashion, probably in some Excel spreadsheet or something like that. And so, that was the reality, right? And then you ask people who used to work there, and you ask, "Hey, is this safe? Please tell us you had a multi-sig. Please tell us you had something in place." And they're like, "No."
So the real basics actually, which need to be implemented.
The real basics, yeah. And there was a hack the day before, so there was some exfiltration of intellectual property, of crypto tokens. Like someone got a bad email that they opened on their work laptop, right in the middle of a bankruptcy. Like it's not a fun situation, right? And that's where I felt like the rallying cry was necessary, and it was quite amazing to just get everyone from the DeFi ecosystem into a Telegram group. It's like a few hundred people. Instantly, everyone coordinates around bringing back one of those core pieces, and that shows you why open source, right, is so important, because we could just take the source code, modify it, deploy it with a multi-sig of people from the ecosystem, create a quick, right, like the normal standard that you want to have for a corner piece of the technology, I would say, on most blockchains, right? This is like the level you just want to be at. And it just happened within less than 24 hours. I think it was like 10 or 12. Mm-hmm. Remember, we started at 11 a.m. in the morning, and by 9 p.m., I got the first market maker to quote, literally fixing his code on a screen share.
Not bad.
And that guy is still around. He's doing most of the volume on the chain. And I think that's the moment where a lot of people realized, wait, the void is there to be filled, right? The void is an opportunity. The lack of the old guard means the new guard can emerge. And you just need to push and claim your place now.
Good insights, thanks for that. Maybe Alex, to focus on your product and what you guys are trying to basically push in the market with ZK. Could you just briefly explain what ZK is for the audience and how you try to basically tackle or bring more people using ZK tech with Elusive and especially ZK tech within the Solana ecosystem?
Yeah, so ZK is a cryptographic primitive, allows you to prove something without revealing what that data is. So you can imagine that's a very powerful in this paradigm. And Elusive, we're basically building Web3's modular privacy stack. And our whole thing is being able to achieve privacy and compliance and allow both of these things to be exist mutually. And this is kind of juxtaposed and kind of paradoxical because on one hand, privacy requires information to be encrypted, and compliance requires some sort of transparency to run computation and and expose data to ensure verification or other things. So at Elusive, we have basically a comprehensive privacy stack. So we have an application that enables basic features like private sending, private token swaps. We also have an SDK that easily allows you to integrate these features into new or existing applications. And then on the lower base levels, we have coming soon Elusive VMs and then MXCs. And MXCs is basically multi-party computation execution environments. And the first instance of MXCs will be Zeus, which is zero knowledge encrypted user safeguarding. Sorry, big acronyms. But it basically allows us to run screenings on encrypted data. And it kind of pulls from the confidential computing market. That's what MXCs are. It kind of sits juxtaposed against like trusted execution environments. And Intel SGX is one of the main competitors here, but basically allows us to create compliance in a privacy protocol without removing the privacy of those actors or honest actors. And why this is so revolutionary is because a lot of traditional approaches have been like KYC and like deposit screenings, and a lot of these have some limitations, especially KYC being very centralized. So how do we create a paradigm of compliance for a decentralized world? And I think that's really the question and the challenge that we're tackling at Elusive.
Mm-hmm. I mean, it's especially interesting for me working for a regulated institution and custodian. We really look into stuff like this. Always need to have a big view on compliance and regulatory requirements. We'll tackle that in a second. But clearly, Elusive an application within the ecosystem built on top of the tech. Maybe, Rob, can you tell us a little bit how the whole staking environment looks like for the Solana ecosystem, how it evolved, and where adoption could happen within staking, in the sense that the ecosystem will grow if you get more delegated funds from more maybe institutional clients, more banks in the future, and where you see the future of staking within Solana.
So just looking at the bare numbers, staking on Solana looks actually really good. I mean, there's a bunch of, wouldn't necessarily call it FUD, because maybe it's the information asymmetry, I would rather call it, because people constantly say, Solana is so centralized, it only has, 2,000 nodes or whatever, whereas in a proof of stake network, so if you have a group of people that control 1/3 roughly, they could basically start to halt the network. So it's really important to look at the least amount of people that together control 33% or 33% of stake. And this number is actually the highest for Solana. So it's actually one of the most or more decentralized networks. Over 2,000 validator nodes running. We know the validator community on Solana. There's a bunch of people who run bare metal, so really physical infrastructure, which is also always very good for the network. 70% of the tokens are staked, which is also, I think, amongst the most or the highest staking rates between different proof of stake networks. I assume this will change once the bull market hits, because people maybe want to invest in something else or cash out or whatever. But so far, even in the past bull peak, we didn't see a crazy decline in the amounts of tokens staked. Pretty promising development or fact in Solana that only 3% of those 70% staked tokens is liquid staked. Liquid staking is basically something where you alleviate some locking mechanisms of the protocol. So you can basically, it's like a voucher, a staking voucher. I stake and I get something, a liquid stake token in return, and I can just sell it on a secondary market or return it for the solid I've initially staked. So there's lots of potential here where I think some adoption could happen. In terms of institutions, they mainly look into ETH for now. I think that's the show pony for now, and I think it will be for a while. But if you look at media, like even Bankless, posts more about Solana. So I think people who are institutions who are, you know this probably best, what kind of POS networks they look at. I think they eventually also look into Solana. Things like Visa or Shopify help a lot to give this some sort of credibility. Many interesting things happening in the staking space on Solana. Unfortunately, we don't have a cool end-user product like Elusive or Mango Markets. We're pretty boring in that regard. We don't infrastructure.
Exactly.
But the cool thing about Solana, since one of the founders is really an infrastructure nerd, so to speak, expert is a better word. I think that's an interesting network overall because he really knows what he's talking about, and he keeps close ties to the validator community, which is also a big plus.
I fully agree with you. We see some demand regarding staking products from a custody perspective. Most of the institutions and financial industry players we talk to look into ETH staking, but I'm sure, and I already see some traction when it comes to Solana as well.
DeFi. Okay. I think the interesting part really in DeFi is who's using it, right? I think there is right now I'd say like a bulk of the community in Solana, especially in the I'd say more creative space. They're still not fully onboarded. It's quite amazing when you see like the differences between people who develop applications themselves. They're very easy with using the features that are offered there, right? These different types of financial products. I think in the recent 3 months, probably lending was the most popular product as people are extremely, let's say, risk averse. We see mainly delta neutral strategies. People are very much just interested in, for instance, leveraging up on the staking rate. I think that nets up to 20% sometimes. So that's definitely a very popular product. It still has risks, but I think it's the most popular one right now on chain. If you would just ask anyone working in the industry, that's probably what everyone has the money parked in. From outside perspective, I don't see so much regular retail flow right now. I think most people lost their money on FTX, especially like the most active DeFi users pre the FTX shutdown, still waiting for the bankruptcy to resolve and have a tighter budget, turned off the trading strategies, or even if they were manually trading, just don't have appetite to try things out right now. I think that's an expected chilling effect, similar to what we saw after Mt. Gox. I think it's also far bigger than Solana. I'm pretty sure it extends to basically all of North America and Europe, where most of the users of FTX were. I heard that in Japan it's different because they got their money back already.
The only country, by the way.
Exactly.
All the other ones are still waiting.
Because they had Mt. Gox before, right? But yeah, it's basically there's not enough chips on the table to some extent for people to make decisions right now. Everyone is extremely careful, and I kind of think it's going to take a while. I see it personally. I think it's a very tricky time, right? And especially as when most of the users are actually pouring their lifeblood kind of into building these things, the risk perspective is a very different one, right? I think in 2021, 2022, everyone was working really, really hard and like extremely bullish. And now the idea is, well, maybe I need some safer investments, money on the side. And so naturally people are flocking to these like extremely stable types of trades that don't have any price exposure, right?
How are you guys at Mango Markets preparing for the next run, and what kind of products are you looking into to basically offer the best solution within Solana?
So I think the core idea, right, like behind the project is that we want to offer access to all the tokens that can be traded easily on Solana, but also we want to help institutional players, high-frequency traders and market makers have the best tool to bridge liquidity over. Because the idea is if you have one chain that runs 10 times faster than the other one, that means that all the users that just want to buy $1 or $2 or 10 are going to end up there because the gas fees on the other one are going to be more expensive, right? And usually those flows balance out and you just need to rebalance once in a while. So it's actually very fine, what I hear at least from trading shops, to trade once a day on Ethereum, buy the assets there, then bring them over and start selling and buying them again on Solana. And that's basically what we're mostly interested in like exploring, facilitating. This only works if there's a healthy way for, let's say, margining, because that gives the market makers the certainty even when they run themselves out of inventory, the people that bought from them might still have inventory that they're willing to lend. So basically the capital requirements on them are a bit lower, which unlocks more efficiency. And I think it's very tricky when you have a non-native asset on-chain. Something like, let's say, wrapped staked ETH. Now, very popular token on Ethereum DeFi. I think there's maybe $1 million worth of it on Solana, and most is owned by MangoDAO, so it's not actively in the market. How do you enable, right, this as a collateral? How do you enable this as, or how do you allow people to take out loans in it in order to sell it, right, to other market participants? So those questions are what we're like most working on, and especially as we have the basic understanding that these things need to be extremely automated, right? And they need to be not only automated by grossly overlooking the details, but actually by modeling the details and analyzing them. And I mean, it's a long task, I would say. It takes a while, and it's easier to do it in an environment that's very illiquid, because then you're really aware of the risks. I think the biggest learning everyone in the space made is that the bull market also improves liquidity, right? All the assets are worth more. Suddenly everyone has more money. Suddenly everywhere is more money. But then when the prices go down, then you have the reflexive effect on liquidity. So suddenly it used to be able to liquidate $1 million in SOL in basically a single transaction. Nowadays, that's more, a few seconds of a TWAP. So just because the asset appreciated in price by 90%, right? So you have 10 times less liquidity.
Good point. Alex, to you. Back to ZK. I just quickly want to talk about the regulatory requirements you guys are maybe facing when it comes to the technology you want to provide to end users. Do you see any challenges and requirements you are basically not quite fulfilling yet? Or do you see the technology as it is right now being bulletproof for really retail users when it comes to the adoption?
I think, we can take maybe a step back. I don't know how familiar the audience here is with the privacy protocols, but Tornado Cash obviously is quite a situation, and that was sanctioned last year, and of course now there's following up indictments on founders, and it's questionable that can code be sanctioned. I think that's a very open question. But for us, the regulatory landscape is incredibly volatile and still very opaque. So we still don't know how that's going to develop. Obviously, we have some beginnings of that with Mika. We work very closely with the European Crypto Initiative and politicians to make sure that we're aligned. But the real innovation in compliance and regulation has to come from the ecosystems, come from the builders themselves. We're working in a landscape where the traditional finance regulation and traditional finance market kind of has created an envelope of where we're supposed to operate. And I think that's very tough when you're talking about a very new technology. So for us, it's about creating a completely new paradigm of what compliance can look like. And when we talk about community-owned infrastructure with blockchain, communities should be able to, in some sense, regulate themselves. Obviously, from like a local perspective, all the way up to regional and states, I think is possible with blockchain technology. So, like I said before, Zeus is something that we are exploring for this, and enables like self-regulation and regulatory compliance on a technological level without having to, remove the privacy of honest actors, and ensure that privacy remains a human right, something that's, again, so vital for us to continue to even innovate. So yeah.
Good point. Anything you want to add to that, Rob?
Well, yeah. Not that much, to be honest. I think regulation is something that affects everyone in the space. I mean, even if some popular, as a validator perspective, some popular dApps would go down because of regulation, it ultimately affects us too. I think from a Mika perspective, Sagan hasn't even been mentioned yet. I think our case is hopefully somewhat clear, so we're not that afraid, actually, at least for Solana, because delegated proof of stake is a bit easier to handle as other networks. So yeah, nothing worthwhile to add here.
Yeah, I can also just add that it's really important for us to also educate. I think we talked about like how we want to overcome sort of these regulatory challenges. I actually got a question about celebrity. I mean, this is a little off topic, but I'll bring it back. Celebrity endorsements in crypto, which I think is pretty silly, to be honest, because we're nowhere close to being able to ensure that consumers and people that are taking in these marketing and growth strategies have the education and knowledge to be able to make good decisions without losing all of their life savings. So this is one of those things where I think regulation can come in and bring a lot of clarity. And that's also a part of this challenge is education, awareness, and being very proactive in really building a completely new paradigm of compliance and regulation.
Mm-hmm. But I think that the landscape in Germany is pretty good. I mean, I haven't been there personally, but the BaFin Tech Days were recently, like, they're actually seeking the conversation. And I mean, that's already a pretty good start. Or while they drafted Mika, I think they're also, you've been there, consulted the industry. So I think, or you see that you've a bunch of people building on Solana or any other network within Germany, but Europe. So I think I'm not that pessimistic about like education happening, but also the willingness to be educated by regulators and to do this like as a team effort. I think there's the rails are in line for this to go well.
Yeah, I think Europe is probably in a really in a more advanced position. I think there was a great talk yesterday talking about the repressive regulatory environment in the US. But that's naturally going to shape the market and push, I think, the space forward, whether the US wants to hop on board or not. I mean, I'm an American, but I think it's really important for them to figure out exactly how they want to leverage this technology and whether they want to be a part of this innovation, and work on creating more constructive regulatory frameworks than going after projects like Tornado Cash that are actually enabling something that's so important and so vital, and destroying a lot of the innovation on U.S. soil. So I think the U.S. is somewhere to really watch closely and figure out how we can overcome some of these challenges.
Do you see the Solana ecosystem pushing in the right direction when it comes to the adoption and mic is off, no, it's working, and seeing how it conjuncts together with the regulation part, and you guys being deep into Solana, where do you see actually the next steps for the ecosystem? Where is adoption going? Why Solana? And are we going to come back to the levels we've seen 2 years ago?
I mean, I think for me, right, I look at it from the engineering room. I think we have a lot of time to build all the stuff that we noticed was missing in 2021, 2022. I feel very comfortable about that. I think there's a general as I said before, right, like there's interest for the time being. Once there is a lot of interest, I think most of the scaling issues we see on all the blockchain, right, designs, even Solana having like, I would say, a very high roof, it's still not a bottomless pit. And at some point it clogs, and we've been there. You can get to the point where every finite amount of resources can be overloaded if you just bring enough people, if you bring enough hype, enough interest to try out things. And so I would say to prepare for that, right, takes time. The quiet is blessing. Like you really can focus more on things and get those necessary upgrades out quickly, while you're not hammered and under load. I think people will appreciate it for two things. Every time I use an application on another network, it is incredibly slow for me. Like you really get impatient.
Yeah.
Like it's impossible. I'm a huge fan of Bitcoin. The block times are killing me. I don't know, like it's just me personally. I don't want to wait 5 or 10, 16 minutes. Lightning is great, but not everywhere accepted, right?
Exactly.
I recently saw people pay with Solana at the Berlin Hacker House for like mundane things like an entrance to a party or things like that. It's really fast now.
It's working.
It's working, exactly. So from that perspective, I'm very optimistic, because if you compare that with most other solutions, it really works. I mean, it's as good as Lightning for payments, I think, without all the madness about channels and underlying technology that you need to understand. There's ready-made SDKs that work, and there's virtually no reason not to use it if you want to accept crypto payments, I think. There is more and more interesting concepts being built, especially on the decentralized exchange side. I see nearly every month someone come up with a new way to skin the cat, just because they managed to port some certain mathematical equation onto the SVM. They managed to optimize it enough so it can run on mainnet. And usually those are calculations that are just too data and compute intensive to be ever ported on an EVM blockchain, where even, I think like Uniswap and Curve, they're in fierce competition about gas. And basically you cannot increase gas for anything, because it would immediately mean $1 more, right?
Exactly.
In transaction fee, right? Where if you have 20% more gas use, that's $1 more in your Uniswap, up to $2, right? And in a bull market, that might be $20 more. So I just don't see how these things will not hurt us again, right? Even if a layer 2 gains a significant adoption, it will still have those issues at very small increase of user base. It's kind of like these systems, how they work is like once they start to clog up, then everyone starts outbidding each other in fees, and it becomes this reflexive thing where it just pushes up the fees like to insane moments. And that's usually also due to the way the DeFi projects have been implemented on these chains, mainly the AMM concept, which doesn't reprice liquidity dynamically, meaning if prices move, then suddenly there's all this opportunity to make free money. And that means you have all this usage that is just completely useless. I think at least this is just like a complete waste of compute, trying to get these like plus EV trades in, right? And then this group of people who runs these trading bots basically makes the chain slow for everyone, meaning that the amount it transfer costs is ultimately determined by the amount of money in DeFi that you can arbitrage, right? Because if the validator needs to choose which transaction to include, he's going to go straight by priority fee.
Yep.
And if there's an arbitrage that's netting more than you're willing to pay for your transfer, then you're not in the block, right? And nothing in the blockchain space really changes that, except for not using AMMs to trade on-chain, right?
Yeah.
Instead using order books, using, trading strategies that use reference prices instead of automatically intrinsically priced liquidity. And I see no way around that, but I know we're on the right path, and I hope that's the right path, right? We're gonna see. It's gonna be interesting, but I'm quite convinced it's the right way.
Thanks for the insights. Really good words for almost closing up. Last but not least, one sentence from everyone. Where do you see the whole ecosystem going, and is there any offer you would like to drop here? Who would like to start?
Well,
So I won't make any price predictions, obviously, but I think I'm in general pretty bullish on the ecosystem because it faces challenges that are not unique to Solana. Like people don't care about self-custody that much. They don't care about growing the Nakamoto coefficient. But then again, Solana does a couple of things that eventually enable or power developers to build things that people care about and build applications where they don't know that they're using a blockchain necessarily. And I think Solana is pretty well suited or has some puzzle pieces in place that enable this to happen. But then again, nobody knows.
Alex?
Yeah, I think for Solana really is the developer community that drives the ecosystem forward, and continuing to build through the bear market. And I think it's probably such a key pillar to general like success. It's easy to leave when times are hard, but I think the outcome when you do stay and work through these challenges and figure out, where are the best implications for optimization, you do move that needle 5-10 times more in the end.
Thank you very much. We'll take it as it is. I see we are running out of time. If there's any questions, I think we are all open for any discussion afterwards. Thanks very much.
Thank you.